sounds of construction. That's what's happening. Things are always under development, aren't they? That's right. It's a developing world, even in the developed world. So sometimes that's what happens. Then you take a step to the side. All of a sudden you're not quite in the most developed thing. Maybe you can even touch some grass, or some earth, or some rocks, or some trees. Right? Touch something kind of natural. Like a tree stump, or some green leaves, or some weeds, or some grass, or some rocks. Now, why am I talking to you about such silly nonsense? Well, mostly to make sure that you, if you are so casually degenerate as to be trading itty bitty Bitcoin in the salad days, I hope you've been enjoying the itty bitty roller coaster that happened yesterday on the 5th of March 2024, when Bitcoin once again reached a new all-time high. That's right. Bitcoin tapped into the 69K zone, above where it had been on the index charts, above where it had been on various exchanges, and set new all-time high again. And then what did it do that exact same minute? Well, within 40 seconds, it went from an all-time high to down about 5%. And then it spent the next few hours or so falling, bouncing, falling, and falling. By the end of the fall, it had dropped something like 14%, 14.5% on the day from the top. But if you look at the actual day and you realize it was a ranging day, you'll see it did range significantly, because obviously from the very bottom of that drop, it bounced up about halfway. And more importantly, the amount it had dropped on the day was just a touch over what it had gained on the previous day. It was about the same. So basically, it finished the day at around roughly where it had started the previous day, thus affecting the ranging motion in effect, right? And once again, the VEPs delivered. And why do I say this? Because we know that in that second that it hit that new all-time high, right before it started to drop, we know people were placing longs right there. We could see it in the liquidation tables. And we know why they placed money there, because they thought, oh, when it gets to new all-time high, it's going to go to the moon. Well, that's why you don't buy high. Right? You buy low and sell high. When it's at a new all-time high, is that the right place to buy? Probably not. Okay? Now, does that mean you should never buy when it's at or near a high? Conditions vary. However, generally speaking, buy low, sell high. Don't buy tops. We don't do that at Alpha Trading. There's a reason for it. Because what happens? Returns, what do? Say it with me. They mean revert. So what happens with the price? Well, the price follows the returns. That's right. And what determines those returns? The standard deviation of returns is what determines those returns. Right? The standard deviation from the mean of the log returns of investment. That's known as the volatility. So when yesterday Bitcoin was juicing up to hit new ATH, and I literally said on stream, a few minutes before it happened, I can feel the FOMO. What was that telling you? If you were listening, which I know you weren't, but that was telling you that I know that the top is in. People are going to FOMO in, and they're going to get wrecked. Right? And that is exactly what happened. How did I know? Well, again, I was reading the VEPs. I wasn't guessing. Right? I was just looking at the information on the chart, not even the price action. Just looking at the trending moves, looking at the volatility, looking at the random walks, right? Looking at the variance, looking at the returns, the divergence between the returns and the price action, the divergence between entropy oscillator and the price action. Right? I was looking at those things. Why? Because those are the things that are highly relevant to the HFT bots that determine how the markets move. How do they determine how the markets move? Well, let's see. They place about 80% of all trades on the market, if not more, at any given time. Sometimes it's up to 90%. Maybe on a slow day, 70%. But basically, they run the markets. How do we know this? Well, do you run millions of trades per second like they do? Right. So even if there's 100 million people actively trading constantly, that doesn't compare to the power and the speed with which the HFT bots are executing little trades, moving markets with little buckets. Significantly bigger buckets than yours, even though they're little buckets for them. But that's exactly how they do it. They stack little buckets, just like we do. Yeah? They may have different nicknames for it, but they're stacking little buckets. Because they understand the game theory, which is you're more likely to have success over the long term by stacking little buckets than you are by trying to move one big bucket and possibly getting wrecked or losing a ton because of slippage. Right? And if you need more evidence of that, see what happened to all those really greedy hedge funds when they got short squeezed by Wall Street bets and all those random retail traders who figured they could gang up against the hedge funds and force them to pay if they would short squeeze them on those, questionable stonks, right? Like AMC and GameStop, right? But they did it, and it worked for a while. They got what they wanted, and those hedge funds that did play against them, there were people getting wrecked in the pro leagues, right? They did not withstand the power of the retail traders who ganged up on them, because there are more retail traders. However, of course, if the HFT firms were to gang up, and they don't, there's reasons for it, but if they were literally to gang up, boy oh boy, that would send a hurting to the retail market, because the HFT firms and the other big firms that move most of the money on the market have way more capital available, right? But it's just that if all of retail gangs up against one little firm, relatively little, then yes, it can even make that firm pay if it finds the right asset to do it with, like it did with AMC and also with GameStop and some others. So what should this tell you? What should this indicate to you? What should this teach you? Well, you should learn from this that you can, in fact, learn to trade, not in the gambler degen way that they do on Wall Street bets, but in a smart way, as is done at Alpha Trading, by using the VEPs. Because that is, again, the relevant maths that the HFT firms who actually run the markets are using. And sure, while Wall Street bets had a few nice wins once upon a time, the fact is, day to day, it's the HFT firms who win. So with that said, hey, happy trading, happy Bitcoining, cheers.